Well, thank you so much for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, here we are Thursday, and we would normally be looking at our weekly export sales data because that's when they come out, but not this week because Monday was a federal holiday. That means we won't get those numbers until tomorrow. So nothing today to report. However, on the wire just a few moments ago, we did get an overnight flash export sale. Let's talk about that for a moment. And what we had was a sale of soybeans again. The buyer this time, though, was Pakistan. Now, that's something you don't hear very often. Pakistan, 352,000 tons. Now, that was a sizable buy, and especially for an irregular buyer. Of that total, 55,000 tons was for old crop, and 297,000 tons was reserved for new crop. So a pretty big buy, and this is at a time when we're getting a little short here on the remaining inventory of soybeans to sell the remainder of this marketing year. Overnight, we had the grains rebounding. Remember, we had the big sell-off yesterday and the day before, for that matter, except for soybeans. So let's take a look at the overnight trade. Let's go to corn. Overnight, we rebounded with July 6.5 higher this morning at 737 3/4. December was up 5 cents this morning. Soybeans, well, they were at it again. July up 11.5 at 1701 3/4. So they're hanging on to that $17 handle. And we have November 8.25 higher overnight. Well, what about the wheat? The wheat is the one that has been a real anchor on the grain trade this week, and it did claw its way back a little bit last night. July Chicago wheat up 16.5 at 1057 3/4. And in Kansas City wheat, we had July coming back by 23 cents last night at 1151 1/4, and that was almost on the high of the overnight trade. Spring wheat in Minneapolis, July 21 3/4 higher at 1218 3/4. So the volatility continues in the wheat complex. Let's go to Brian Hoops of Midwest Market Solutions and discuss what we are seeing in the markets here this week. It's not for the faint of heart. The market's whipping around everywhere here. Brian, what's going on today?
Good morning, Marlon. Yeah, good to see a technical recovery in the overnight markets. Now, hopefully, we can sustain these gains. You remember yesterday we were a little bit higher coming out of the overnight trade, and didn't take long before we took out some overnight lows and really set off sell stops once again in the complex, especially for corn and wheat. So typically we see funds enter exit positions in a massive way in 2 to 3 day increments. Today would be day 3. So I would hope that we can absorb any early selling if there is some. And, by 10 o'clock or so, if we're trading higher, I think we start to see a little short covering actually start to develop, maybe some end user buying. Probably mostly in the soybean market, as we saw an export sale this morning to Pakistan. Now, that's not a traditional buyer by any stretch of the imagination. The one cargo was for old crop sales, and Pakistan's only bought about 1% of the entire U.S. sales this year for that old crop variety. They haven't purchased anything for the new crop until this morning. So they're not a very traditional buyer, as I mentioned, but it does take bushels off the balance sheets. And next week's supply and demand report on the 10th, that'll start to show more soybean sales on the books, less ending stocks numbers to work with for the old crop, less carry in for the new crop, and just a tightening balance sheet overall, which I think will be supportive for the market.
Okay, well, we'll pause right here, and Brian, we'll come back in a moment, and we'll talk about the livestock trade and maybe some of these outside markets too here on a Thursday when we return. Let's look at some of the outside market activity overnight too. On the Dow Jones Industrial Average here, of course, we had some ADP jobs data, I believe, that came out this morning, and it was not as rosy as had been expected from what I understand. We'll probably get more details as we go deeper into the day. But anyway, the Dow is not doing much right now. The June futures are 34 points higher this morning at 32,832. We have been watching with keen interest this U.S. dollar index value this week. It's been really chopping around, and June futures overnight down 369 points at 102.160. And of course, the big 800-pound gorilla in the room is the crude oil market. It's actually lower this morning now, but it's still at, excuse me, at 114.02. So it's within, about 95 cents or so of its high of the overnight trade. And there was news, let's go back to Brian Hoops. Brian, there was news that I believe of the OPEC plus nations, it sounds like some of the Middle Eastern countries, or maybe in particular Saudi Arabia, are willing to ramp up production now. And I suppose that's going to kind of keep a lid on the energy market for a while.
Yeah, that just creates more supply, so that will keep a lid on rallies. But another country that could produce more oil if it wanted, the United States, and we just are handcuffed in doing that to keep our gas prices down. But that's probably a talk for another time. But it is frustrating to the farmers out there because spring diesel prices are just skyrocketing through the roof here, and truckers all across. It basically affects everything in our nation. These high energy prices, and we certainly could be doing something about it, and it's not happening. Cattle options, I think it's important to note, June cattle options expire tomorrow, and then first notice day against first is Monday for those June live cattle. Now, really no threat of deliveries at this time, but we're still a couple dollar discount to the current futures market. To the cash, and we had a good rally yesterday. Key will be if we can start to take out some resistance, have some follow through in here, because as widespread as that rally was yesterday, it was just inside of the trading range of the previous day on May the 31st, when we had the end of the month type positioning. So it's kind of key here for the cattle market to get off to a good start and find some buy stops above those old resistance highs.
So the nearbys had, had the most strength on live cattle yesterday, and August was up 252. How significant is that?
Yeah, look at the June and August spread. It pretty much has been evaporated over the last week or so. A lot of spread trade been done in the cattle market. We've had a real struggle trying to sustain rallies, and that's because of the poor economy. The ADP number that came out this morning shows a real slowing economy, not near as many jobs added as what the trade had expected. And tomorrow's non-farm payroll is expected to tell us the same thing. So it's a slowing economy. One that producers, I think, want to remain hedged in on their cattle, especially going out into this late second, early third quarter of this year, before numbers start to tighten up significantly in the fourth quarter.
And one has to wonder how much pressure that'll put on here. Looking at the close on feeders yesterday, with the live cattle higher, feeders were up sharply. August was up 460. I don't know if they can follow through on that or not today. Lean hogs yesterday, we had July up 442 at 112.42. That'll be the starting point for today's trade. So it had quite a session yesterday. Well, Brian, thank you for helping us navigate the open this morning. I appreciate that. We'll try and gird ourselves for what may happen today. But we'll buckle up, and thanks for the help. Brian Hoops of Midwest Market Solutions. Suzanne, I'll turn it back to you.